All right, Senor T. We are live. Are you ready to kick this thing off, brother?
Man, let's do this, man.
Let's do it. What do you do, KTTV? This is KT, and we are here for another episode of the Administrators podcast. And so tonight, we want to welcome everybody back to the podcast where we break down the stock market structure with discipline and clarity. And so if you're an educator, investor, or a trader trying to understand not just what is happening, but why it's happening, this is your classroom. So tonight, if you have been looking at the news, you know that the market is reacting to the geopolitical tension, the oil spikes, and the shifting rate expectations. So tonight we're going to break it down, what's happening globally, why inflation fears are back, and how that connects to my Synopsys chart that we'll talk a little bit about, because we are at a decision level in that stock. And so let's get into it. So Jose, give us a little bit of what we talk about in that market post tonight. First off, before we even jump in there, how you doing, brother?
Man, what's going on, KT? Everybody out there, good to be here tonight, y'all. Yeah, we just getting through, man, trying to push through to get to this spring break.
Look, man, spring break is right around the corner. My God, man.
Sure is. All y'all educators know what that's feeling like right now.
Look, man, I don't know if I'm gonna make it, man.
So we got that spring break, and we get to have a little bit of week of trading. Get to try to hit them up. All right, so speaking of that trading, man, let's get right on to it. And as like KT said from the jump, we have some tensions going on right now, some conflict in the Middle East. And so we are here to talk about what's going on out there with this heat map. So as you can see, we have some spots of green and red. Some of these tech stocks like Microsoft, Palantir, Apple, Nvidia, they have been feeling the hit, feeling the selling pressure. And so today, they broke out a little bit of the redness. You know, they hit some green spots today. But the market this morning, when the futures hit last night into the morning, the market was really, really red. So we did see a little bit of a bounce back today in the market, kind of around 11 a.m. or so today. One thing I want to draw your attention to is you look into the sea of somewhat reddish and green. We've got these oil energy stocks right now. Exxon Mobil sitting at 154. We've got Chevron sitting at 189, y'all. 189. And so our energy stocks have definitely started to go up because of that clash in the Middle East, where people are wondering what the price of oil is going to be, how much is that going to fluctuate, knowing what's going on over there, and knowing that sooner or later we might be closed off to that part and the oil in that area. So pay very close attention to those energy stocks. And so we have also our industrials were relatively green today. Boeing, we've got definitely any war defense stocks, Lockheed Martin, RTX. So we definitely got some of those industrials, aerospace, and defense out there that are also green because of this conflict that is happening. So pay close attention to those. Now, there are some tech stocks that are kind of influenced by the war in a positive way as well, when it comes to like our defense and like any type of cyber activity. So that's why Microsoft was up today. Oracle, Palantir definitely was up today. And our CrowdStrike was up 3.46% to 384. So later on, we will be taking a look at that Palantir. But right now, as you can see, some of our technology space is green, and some of those have to do with just the pressure that was put on from the selling, and some of those tech related to any type of security. All right, and so now we are looking at our fear and greed index. So we are sitting at a 42 right now, fear. Today we were almost in the red, or the bright orange, the darker orange, I mean. So we did start off in the 40s, about 38 today, but we did work our way up to the 42 fear. Like I said, we did have a little bit of a shakeup and a bounce today, before midday. Our VIX is sitting at 21.44. And remember, when we talk about that VIX, guys, remember, the closer we start getting to 25 to 30, the more, you start thinking about what it is you want to buy, because at that point, we looking at a bounce back if we get too far in the fear, and we are extreme fear. But right now we are sitting at a 42 on the fear and greed index. It's looking like we could be, trying to fluctuate between staying at neutral, going back to that, extreme fear, trying to push through. We were in a good spot when it came to the fear and greed. We were getting closer toward that greed last week, hoping to get through that rough patch that we were going through. But then, of course, we had that geopolitical things happening this weekend. And so we are now sitting back, in the fear as well. So keep an eye out for that, everyone. KT, take it away.
Yes, sir. Yes, sir. Well, I appreciate that, Jose. So now, I guess as we talk about that, let's jump into a few more headlines. So as we talk about what's going on in our world today, and so I just want to kind of put this on the screen. As it says, stocks slide as Middle East conflict plans inflation. And so let's talk macro, right? Markets are reacting to the rise in the geopolitical tension in the Middle East. U.S. and Israeli stocks have escalated on Iran, have escalated concerns, especially after Iran threatened to close the Strait of Hormuz or Hormuz. I don't know how that goes. But the biggest thing is that's significant. And that is significant because roughly 20% of the world's oil passes through this strait. Did you hear me, Jose?
I did. I sure did.
20% of the world's oil, man. So when that's threatened, oil spikes immediately. And so as you talked about, we got the Chevron, we got our Exxon jumping. Brent crude today jumped as much as 13% before settling near $78 a barrel. And the natural gas in Europe and Asia has surged nearly 40%. And so why that is so important for us is because we know that energy is inflation. And so high oil prices mean higher transportation costs, higher production costs, and potential consumer price pressure. Now layer that on top of the already rising ISM price data and tariff pressures, and the Federal Reserve suddenly has a tougher job. So the markets are now pricing a 97% probability that the Fed holds rates in March. The June rate cut expectations are fading slowly. And so when you think about that, what does that mean? Rate cuts are getting pushed further out, and that's not bullish for high growth stocks. And so that's why we're seeing Asian markets selling off. That's why we see the dollar strengthening. That's why we're seeing gold edging higher and risk assets beginning to hesitate. And so this is a classic risk off rotation, which means all capital, including mine, is going to move to safety as the volatility rises. And that means as traders, we must adjust. And so as we look, we know that this is not panic. This is repricing. But the biggest piece, and we talked about this earlier, markets hate uncertainty. And so all shocks increase uncertainty, and inflation shocks increase rate uncertainty. And that creates volatility. But as we know, with our cups always have full, volatility equals opportunity.
That's right.
But only with the structure. And so now what we'll do is let's continue to look at that macro backdrop to our choice. And so, Jose, before I jump into this platform probing, man, anything you want to share on that?
I just think that you hit the nail on the head, hit the nail on the head when you said that we've got to restructure. We have to have that structure and know what safe havens or where to put the money at. And so it's going to be volatile, but like you said too, volatility means opportunity. So yeah.
Hey, look, man, volatility means opportunity. All right, so now let's jump into a little bit of this Synopsys chart because that is something that I was looking at, and so Let's see how I can get back to my charts here. Here we go. All right. Okay, so what we'll do is we'll take a look at this 1 hour chart in our platform proving section tonight. And so I just want to kind of keep everything copacetic. Let me see here. So let me get ready to share this screen. Okay, can you see me?
Yes.
All right, so now as we look at our Synopsys chart, this is the 1 hour time frame, and this chart is in transition. So as we look to the left, we see this big red candle, and so we know that that is bearish control, right? So we had a strong rejection up top, as we see this candle right here, and then the lows, lower highs form, and so we start moving under all of our EMAs, right? And so we just took a nice little trip down. They say we take the stairs up, but the elevator down.
No.
So if you look all the way from February 25th, we started our bear trend, and now here we go all the way down to March 2nd. And so that gave us a sell-off into the 412 area, which is where I picked up something. And on the 1 hour chart, that is a clear short-term bearish control. But now, if you look in these last few days, so we're talking about, matter of fact, today on our 1 hour chart, we did create a base right here. So I put a line just to show that base. So now, as we look to the right side, we get strong green expansion candles off of those lows. So if we look right up in here, up there 410, 412 area, those are some of our strong green candles. And then what happens? Our EMAs start to cover back over. Our candles start to cover back over our EMAs. So the blue moving average, it crosses that, and then it crosses back over the green. So this is important because it shows a short-term reversal. Not yet a higher time frame reversal, but it is showing us that there's something to look at. And so some of the key levels that I looked at as I jumped into this today was that 422, 425 zone, which was some of our immediate resistance. And so then if we come back and we look where what happened, that 422 was our 60-day EMA. And so you kind of see everything kind of got a little red. And after we got up there, we did start to push back down. Our major 1 hour resistance is where I got my line drawn. So that's our 426 to 427, which is where we hit today. And then everything started to crash down. So what I'm telling people is we're not holding until we get above here. So we'll say around 434. That's our real reclaim level. That's when we know that everything is clear and we are ready to jump in. Our support, as we can see, is really down here around our 418. And then we'll come back down to our 412 level, which you can see we did have a lot of traffic hanging around that 412 level. So that's what we want to do. And so what does that mean for us on the 1 hour? This is a bullish attempt. As we can see, we had our push up, but it is pushing directly into overhead resistance with a downward sloping midterm moving average. That makes this a decision zone. So if the price closes strong above our 426 where we crushed today, what we want to see is a hold that level on a pullback. So we want us to kind of get up to that yellow line, which is our 200 EMA. And then if we can see a pullback and it hold that 426 level, that means we have a higher low and then continuation becomes possible. What we see today, if it stalls under 426 and it prints those upper wicks, and we are probably looking at a fallback at least to our 418. And so that will kind of hit us in this level right here where we started at. This is our 418 level. So this was just a bounce inside a larger down move. So let's hope that we don't kind of hit that thing and then we heading out back down. I did sell my position today. once I seen profit, because I did have about $10 of profit on a really, really nice call that ended this week. So the biggest piece I want to take away from this is time frames matter. A bullish 1 hour candle can still live inside a bearish 4 hour candle, right? And so as we go over here to our 4 hour candle, that's where we at right here. So as soon as we got back up to our 20 EMA, what happened? We got a nice rejection that came down and it folded right here on our VWAP and on top of our 9 EMA. So remember, when in doubt, always zoom out. And so we'll keep going from there. But I think that'll be it for that synopsis. So I really just gave those numbers, and I will say again what our numbers are. Our key levels for immediate resistance is that 422 to 425 zone, which I showed you. Our major 1 hour resistance, and we go back to our 1 hour chart, that major resistance is going to be at our 426, which you see we had a big pushback out there today. And we are waiting, holding until we claim our 434 level, which is right here, right above our 200 EMA. So we can get a close right there. Continuation is possible, but until then, be very, very weary about this chart. And that will do it, man, for the platform program, brother.
And I wanted to say, as you had that chart up, if it continues to fluctuate between that 426 and that 420, man, could be the formation of a bullish flag. Just want to throw that out there to everybody. Can you hear me?
Yeah, I just want to say I agree with that. And the thing is, too, man, the 1 hour is early signal, but the 4 hour needs confirmation. Yep. Swing confirmation requires reclaiming 434. But until then, this is technical, not positional. So we just waiting and watching, man. That's it, man.
All right. So we want to take it home with this Palantir chart.
Taking us to trade school. What we got?
All right. So let's take a look at this chart now. Let's take a look at our. Oh, can you see that?
No, I don't see nothing yet.
Okay, let me get there. Here we go. All right. So now we got this Palantir. We talked about the Palantir earlier. And let me tell you why I want to talk about this stock today. Because if you go all the way out here, we were sitting at 194. We have been in a downtrend for the past 2 months. We did get a little bit of a, bounce up here to about 164. We came back down. But we noticed this, and we were talking about it at 128 when we hit a double bottom. KT was telling me earlier that he was definitely in that thing. So what I want everybody to understand now is that we are trending up. We are still overall in the downtrend, but we have rolled from 128 to 145, and we are sitting at an RSI right now of 63, which means that we are almost at the overbought area. And so what I want to take a look at is to make sure that we are looking at this 145 area, because we are about to hit we did hit a double top. And if you guys know, double top does signal a bearish sign. And you can see we do have the little red candle right there for this. And so we are starting to have the little bit of the resistance right there at this 145 level. So what I want everybody to pay attention to is if we kick back down, our first potential stop could be 138, y'all. So I'm looking at this at 138 with a potential to go down to 135-ish and perhaps even down to about 130 before we can relatively get back up. If we break this double top and if we continue to fluctuate before we do get to that 70 RSI, guys, we could potentially get to 155 before reclaiming that 157 and eventually to 163. So if you zoom out, because when in doubt, zoom out, you can see that we have formed a little bit of a cup and handle, guys, and a cup and handle signals a bullish pattern on the map. But remember, we do have this double top, and so we could have a little bit of a rejection here at this double top, only because we haven't hit that 70 RSI yet. We're sitting at a cool 63 over the 7-day chart. The 1-year chart, though, is sitting at a 45 RSI. So remember that when we look at it from the 1-year perspective, we do have room to go, because remember, we touched 194 2 months ago. So that's the stock that I'm looking at, and I'm looking at it in particular also because of this geopolitical war tension that's going on right now. It is considered an AI defense stock as well, and so it could benefit from all this tension that is happening in the Middle East. So just keep that in mind. When you look at the chart, we do have a little bit of room to go up, down, before we can take off. And if we just take off now, it's due to all this geopolitical tension that's happening out there today. So keep an eye out on Palantir, y'all.
That was a good breakdown, brother. Good breakdown. All right, man. So I think that'll do it for us tonight, man. Tonight we broke down the macro shock, the inflation fears, and why Synopsys is in a decision zone. So as far as for me, we watch. Does 426 break? Does 434 get reclaimed? Or does the resistance hold? We'll be back next week, or maybe later this week, depending on how that schedule looks, and to break down the reaction. So make sure you are subscribed to the Administrators. Jose, anything before we dismiss this class?
Man, if all y'all educators out there, man, hang in there 4 more days, y'all.
Hey, that will do it. It's the KT and my co-host
JoJo, baby.
Hey, signing out for the Administrators. 100.